Good afternoon and welcome everyone to today's US markets update and third quarter earnings review. Great to see so many on today's webcast. My name is Kelly Main, Associate Portfolio Manager, and with me today are Fortrend CEO Joe Forster, along with Portfolio Managers Stephen Lyle and Chris Wallerman. We welcome question and answers throughout the presentation. Please feel free to click on the chat tab on your screen to ask a question. We will do our best to answer it in a timely manner and as best as we can. With that, I'll now turn the presentation over to Joe.
Hello, we do have a chat box, and I feel that when I present on the computer that I'm not getting the energy of the crowd, and it's much more productive when you ask the hard question and you participate through sending messages, and we can turn it more into the investment club type environment that we have when we present in the office. So please send chat messages. Today, or this month, what I wrote about is bifurcation, is an understatement. What that means is that the market is really going down two separate paths. And there's the sort of haves and have-nots. There's the what were the FANGs, and there are the what we call now the sub-10s, which are stocks that are big blue chip stocks trading at less than 10 times earnings, and many of them have big yields on them. And the FANG stocks are now, the top five would be 25% of the market. So a good day for Microsoft and Apple is a good day for the market. The market this month surged 5.7%, while the earnings estimates were only up 0.4 on a recovery and a reopening trade. Reflation and a reopening trade. That pushes the PE up to 20.7. So we're trading now at about 20 years worth of earnings, which are growing as compared to, for example, the 10-year Treasury yield, which is modestly up to 1.55%. I say there are 5 companies worth more than $1 trillion, and they trade at more than 7 times sales. When I first started studying investments back in the early 80s, when Greenspan was coming in and Reagan was coming in, the interest rates on the 10-year bond were very high. Coming out of the Carter era, there was a lot of inflation. And it was common to say, well, a company should trade at 1 time sales, they should have a 10% profit margin, and they should trade at 10 times earnings or trade at about 1 time sales. And in the last 30 years or so, Greenspan was very focused on bringing prices down or bringing inflation down. And as interest rates went down with inflation, the asset values went up. And so during the dot-com bubble, the PEs surged from 20 to 25 on the expectation that the new economy, as it was called at the time, would allow for higher growth without inflation, higher growth at say 5%. So we had PEs bumping up to 25. But at these low interest rates, we would be comfortable with a P of 20 overall. It's just that there's a real difference in the big, the FANG stocks, as they've been called, compared to what we're now calling the sub-10s, where there's a lot of opportunity. But that rotation trade from the high growth stocks into the low PE, high yield stocks is a rotation trade that over the last couple of years has had some false starts. But there are 59 stocks in our universe of about 300. We follow about 300 of the S&P 500. And there are 59 stocks which qualify as sub-10s. That's a price earnings ratio below 20. This month, the market sort of demonstrates that the biggest upside mover in the market, Tesla, is up 43%. And there are a number of other companies that are coattailing on Tesla. There's a company coming out public, was priced last night, Rivian. And they're did I pronounce that right, Steve?
Rivian.
Rivian doesn't make any cars, but they plan to, and they're worth $60 billion. So they're worth more than Ford and a little less than General Motors. There's another company called Lucid, which is worth about $60 billion. They're planning on making electronic vehicles, and they're chaired by a guy from Darwin who went on to run Dow Chemical, Andrew Liveris. So there is also a float last week of a company called Volvo, which is not the commercial vehicles division of Volvo, it's the car division, which has a very big shareholder in Geely, the EV company out of China. So electronic vehicles, some of these companies are, as we've suggested Tesla should, some of them are separating cars from battery storage or electricity storage. But these companies are worth, Tesla is worth much more than all other car companies combined. And it feels like a bubble. So unless there's distributed power, then it's not worth that as a car company. It's only worth that if you incorporate distributed power, which is getting a lot of political support from the people like Joe Biden and apologizing to the Paris Accord as he did this week. Spotify, another, we'll go into more detail on Spotify later. NVIDIA is worth $650 billion. The other movers in here, Cleveland Cliffs, US Steel, and also Nucor. There's a big run up in US steel companies as demand for steel has increased dramatically and prices have increased dramatically. On the downside, you can see Brinker. Brinker is based out of Texas. They're only worth $1 billion now. They've got a lot of restaurants called Mr. Brinker started a company that made restaurants called Chili's, Tex-Mex place. They also have a restaurant chain that does Italian food, but mostly it's these Chili's restaurants. And their cost of labor is going up, their cost of raw materials is going up. People are still not going to the restaurants. They've got some leverage. And so they got hit this month. And we've had some starts and false starts on the reopening trade. And this is a bad month for the reopening trade. Carnival is down. The airlines just got all smacked across the board. Delta, Southwest. IBM doesn't seem to be able to reinvent itself, even though they have new management. But the other, we've got United in the down column there, and some other companies that are less, that are in some trouble. I would say that one of the things we wrote about 6 months ago was this woman, Lena Khan, who came out of Yale and was supported by Warren, Elizabeth Warren, to try to develop some antitrust policy, particularly against Amazon and maybe against the other FANG stocks. So there is some momentum building in this Democratic leadership that we have in the United States right now to try to contain some of the power that these FANG stocks have. And to put it into a long-term perspective, I think for our client base, they'll understand that the wealthiest people in the world have typically been the newspaper men. And going back to Howard Hughes or Hearst or, lots and lots of, well, let's say take Murdoch and Packer. So people who own media and can influence the way people think often make the most money. And the power to influence now rests clearly with Google and Facebook, not with those traditional media companies. And that power frightens politicians. Just on a side note, I don't know if anyone's check if I'm getting any messages here, but there was this, no messages yet. There was this news that CNN won't broadcast their news through Facebook anymore. And we can still call it Facebook, even though the parent company is changed its name to Meta. But CNN said they won't publish through Facebook Australia because the government here decided that if somebody makes a comment underneath a CNN story that is libelous, then CNN is liable for a comment made by someone they don't know. So CNN said, we're out of here. So, but that's driven by, the politics of trying to decide or clip the wings of the influence of these giants. In this chart here that I've just brought up shows the price increases along the bottom, and to the right, the changes in earnings estimates. And the changes in earnings estimates sometimes lags the prices, as we've seen with BHP, but financial institutions up. FANG stocks driven up higher because we have Tesla and Spotify in there. But the earnings estimates are really surging for oil stocks. Oil has been soaring in the last month or in the last 3 months, and we've seen oil prices up substantially, and we've seen jet fuel prices up. So where we talk about the risk of inflation in the market, what we're seeing is that there's inflation in wages, and there's inflation in raw materials like steel, and there's inflation in oil, and that's reflected in these earnings estimates here, where we're seeing earnings estimates for metals companies go up and earnings estimates for oil companies going up. And the stocks that went up, you can see along the bottom, FANG stocks, you've got an 11.5% increase on average for the FANG stocks, which includes the 45% increase in the value of Tesla for the month, making them a $1 trillion company and making Elon Musk the wealthiest man in the world. This chart here, of course, is the relative value model. And what we're doing is taking the price and divided by sales on the left, and the price divided by forecasted earnings estimates on the right, so that if you cancel out sales, the slope is the price earnings ratio. And with the bifurcation that I'm talking about, you can see that the FANGs, software, and semiconductors have high margins in the 30% range plus, and they have very high price earnings ratios. But the sub 50s are in traditional industry sectors that are down along the bottom, such as housing, oil, auto, metals, chemicals, paper and forest products, and other companies that you can not see in that cluster. But just above that cluster, you have slightly higher margins for companies like consumer products and energy, consumer products and entertainment, which trades at 4 times sales. Pharmaceuticals and money have about the same price to sales ratio, but as you move to the right, that indicates a lower price earnings ratio. So even though entertainment, money, and pharmaceuticals trade at 4 times sales, the entertainment has a higher price earnings ratio on average than the market, whereas financial institutions typically have a lower one. And surprisingly, pharmaceuticals have a very low PE ratio, and biotech have a very low PE ratio, below the industry averages. We would have thought that you would have a higher PE for pharmaceuticals and bio, but they're subject to the risk of government regulation, and that scares the market. And when you get the Democrats coming in trying to control the prices, you get some lower price earnings ratios on regulatory risk. Earnings estimates, this is a chart showing how earnings estimates have changed for the month. Spotify has gone from making very little to being forecasted to make a lot. And we'll go into that in a little bit more detail. Below that, we see earnings estimates going up for Occidental and Marathon and Apache. And then below that, we see Cleveland Cliffs and Nucor and US Steel. So what we're seeing is oil and materials there with earnings estimates up. Just to put it into perspective a little bit, Cleveland Cliffs is more of an iron ore producer that makes pig iron that will go into the manufacturing of rolled steel, for example. Nucor has mini mills, so they take recycled steel and make rolled steel out of it, and US Steel is somewhere in the middle. So all those companies are up. Then below that, we have ConocoPhillips and Devon and Alcoa. And there's an announcement, Donald Trump put tariffs on imported steel and aluminum, or aluminium as we say here, and those being knocked down in Europe, but not in the European Union. They're allowing those tariffs to expire. So that's good for the relationships with Europe, but China is still out in the cold, so to speak. And of course, they're buying iron ore from Australia, Rio Tinto, et cetera. And on the right, we can see Rio Tinto estimates down. So the contradiction there is that iron ore is going down, earnings estimates are going down for Rio Tinto, and they're up for Nucor and US Steel and Cleveland Cliffs. So that's a reflection of inflation pushing through the chain. On the downside, United and Southwestern, I mean, the problem with airlines is that they have very high fixed costs and very high regulatory costs. And the cost of putting an additional passenger in a seat is the cost of a meal. So there's this great temptation to fill the final 20% of the seats with somebody who's willing to pay the variable costs. And it's a long-term loser. So it's important that the companies do maintain the pricing, but they end up competing. Intel is in trouble. They are down 17%, but Royal Caribbean down in earnings estimates, and Brinker down, Boeing down. We own Boeing, and a few others to the downside. I'll talk more about these in detail later. Now, if I got any questions, no questions yet. Steve, would you like to ask me a question?
Joe, what's your favorite song?
Oh, my favorite song. That's a good question, Steve. I'm glad you asked. When I was 10 years old, the Carpenters came around to our school and recruited my sister and half a dozen, well, maybe 10 other kids to go on stage with the Carpenters to sing a song that went la, 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 la. And I'm not going to go any further than that. I'll stick to the stock market. But that was my first concert, was the Carpenters. What's your favorite song, Steve?
Oh, I like Hotel California. I mean, it's hard, to pick a genre, but
yeah, well, Hotel California. Okay, well, now we're looking for some clients to ask some more relevant questions, I guess. But you guys are quiet today, so I'll pick on somebody. Now, macroeconomic implications of earnings. I want to just talk about how this earnings is really, because what we're seeing is that this earnings in this recovery is causing a lot of volatility. And there's government policy laying over the top, which is impacting how people are planning into the future. Of course, Biden's policy is tax the rich, increase the debt, and spend on infrastructure. And the Senate is currently split 50-50. But if there's a equal vote, then the vice president will make the split decision to break the deadlock. The Democrats have a majority in the House of Representatives. And that's, of course, you get California has the most because they're the most populous state. I think they've got 53 representatives, and somewhere like Rhode Island might have one. Or is there a minimum 2, Steve? Some states have 1.
Yeah, it's a minimum 2. California, I think, has 54, but that might be going down because the population is declining.
They're moving to the slave state, are they, Texas?
They're moving to Texas and Florida.
So Jim, you're asking, where's inflation going in 2020? Well, that's the $64,000 question, Jim. Where is inflation going in 2020? I think that the biggest concerns are wage inflation and then it's supply chain issues. And the market's very concerned about supply chain issues right now, especially in semiconductors. And it's my view that this is not a problem on either of these. And the reason for that, the reason I say that, Jim, is because when Trump went to trade war with China, the supply chains were adjusted very quickly, and it was proven how flexible they can be. It was really surprising, I think, for everybody to see how quickly the supply chains adjusted. Right now, what we're seeing is that in oil, the ability to spend money to increase production, there's a lag. And the recovery and cost of oil has caught people by surprise. And there's always the temptation for an oil company or for the industry in general to spend money to build capacity. They'll announce giant capacity expansions that they don't intend to actually do to scare off the competitors from making expansion announcements. Now, so oil is going to take a little while. Semiconductors is going to take a little while longer. Now, fortunately, semiconductors don't make up a large component cost for Ford or General Motors, and so they're willing to pay up for the chip. The question is, can they get them? So it's a supply disruption. There's 3 big chip companies that have fab plants. and that's in the US Intel, and in Asia at Samsung, and in no man's land is Taiwan Semiconductor, and they're all planning gigantic expansions. There's a really good YouTube video by CNBC on fab expansion, and that's going to take another 3 years, but it'll be in place by the time G5 comes around. So I think the other question is going to be wages, and we've seen the surge in wages, and people haven't really tooled up with real new training to get jobs. We've seen a lot of union strikes in the United States at Deere and at Kellogg and some other strikes that are just not on the tip of my tongue right now. But
the port in LA.
The port in LA, yeah, is the big one. So there are a lot of strikes going on. I see that as being relatively temporary. So I'm not as concerned about inflation as the market is. Thanks, Jim. Polls show Republicans would pick up seats. Midterm elections are coming, and things are getting bogged down in Congress. So, Trump found power through executive orders, or just, as he called it, draining the swamp, where Biden just doesn't seem to have the ability to summon the power that Trump did, whether one policy is right or not. Everything's getting kind of bogged down in Washington right now, especially with these 2 or 3 moderate Democrats in the House of Representatives who are keeping the more radicals in check. And the more radicals might be considered to be Elizabeth Warren. The reopening trades had a number of false starts: entertainment, travel, airlines, hotels, restaurants. They had a bad month, but they could do better. Julie, hi, Julie. What's your view on Merck as an investment and the promising data from the, well, I don't know. I don't know, Julie. I guess it's good, but I'd have to look at it more closely. I mean, I think it's nice that I'm going to get political here if I'm not careful. I think it's good that we're now opening up in Victoria and saying we're 80%, so people should go out. And I don't understand why we still have contact tracing, but if we have a Merck pill, then it is less relevant that people get sick. And when I look at the statistics, it's still over 70s that are impacted and not young people. If the Merck pill is used by 1% of the population, then I guess I'd have to do the math and figure it out. But I wouldn't buy Merck based on that drug. I think they've probably got a lot of other levers to their stock price than the particular COVID antiviral drug, and I suspect there are other ways of treating it. But I'd have to look at it. But I wouldn't. It hasn't been something I have looked at because I haven't presumed. I presume that it's not a needle mover. But I'll have to have a closer look. There's the reopening trade. Thank you, Julie. There's a reopening trade, and there's the reinflation trade. And the reinflation trade has an impact on buyers and sellers. So if we have inflation and wages this period, oil, energy, raw materials, it benefits wage earners, oil producers, and steel producers. But there are buyers who have to absorb those costs. And what we've seen in this quarter is that the higher costs have been mostly passed through. Some companies have seen some increases in their costs and have reported lower earnings, but it's very rare. Mostly what we've seen this quarter is that they're maintaining margins by pushing the costs through, and inflation is pushing through to the economy. For example, the steel industry, the price of rolled steel has gone up, and rolled steel is used to make cars, dump trucks, tractors, and steel goes into skyscrapers. So we've seen that getting pushed through, and it's been very limited impact on the profitability of companies, and there have been very few disappointments as a result of higher wages and higher costs of inputs. Semiconductor prices increase, and that's the impact there isn't on pricing, but they're basically just can't get enough. So Apple is said, I think it was today, I don't know if Steve or Chris, you watched this story, but I think Apple said, we're not going to make iPads, we're going to make phones instead. So they have to make a decision on what they're going to make. And
yeah.
did you guys see that story today?
Yeah, so in the quarterly results, they were one of the major tech companies to cite supply chain disruptions for the disappointing revenue for the quarter. It knocked about 6 billion off their revenue for the quarter, which is about 6 or 7%. And one of the strategies they've adopted moving forward is to allocate more of their chip supply to the very highly profitable iPhones, more so than the iPads.
Yeah, so they're making decisions, and the results out of Ford and General Motors show that now I'm going to get them mixed up. One has reduced production, and one said we had reduced production last quarter, so we've got enough chips this quarter. I think Ford said they had production problems last quarter, and they've got chips they can use this quarter, but it's certainly affecting the auto production. Walmart, Amazon, FedEx are preparing for their hiring season, where they hire a lot of workers, are prepared to pay a lot for these incoming workers who are going to be, they're going to have attitudes because they're in demand, which is what people do. Energy companies can't spend FedEx fast enough. Supply chain disruptions will be resolved faster. We've seen some flexibility as a result of the Trump trade wars. And so that flexibility will help water find its level very quickly. We're not concerned so much about inflation. The chip shortage will take a bit longer, but the fab plants will be in place for 5G. China, there's a lot of risk going on in China. And if you haven't been watching it closely, the Evergrande is one of a dozen companies that have giant projects all around the world. I mean, the many Chinese companies putting up gigantic projects in London, in San Francisco, in New York, and they're running out of money. So some of these projects might get put on hold. So there's some real refinancing risk that's going to have to be dealt with in China. There's also regulatory crackdown in China on allowing children to play video games, and thank God they're bringing that in. I mean, I think the West should bring that in. Gaming, the big crackdown on gaming, education. They want to control what people are learning. And there's a crackdown on people having too much personality. Jack Ma has too much personality, and I pronounce this way, but Zhao Wei. Does anyone? I wish I could hear people, but Zhao Wei is who's the biggest movie star in Hollywood now? Kelly, you got an idea? Is it who's the hottest property?
Wasn't it that woman that we spoke about, or is that her?
No, she's okay. Zhao Wei is the gigantic movie star in China, and she just disappeared from the internet. So it's a system where they could take someone like a Scarlett Johansson and just erase her name from public records within the Chinese wall. So it's an environment where don't be too proud or you'll be taken down. Maybe it's a tall poppy syndrome. And Taiwan, of course, we've heard a lot of talk out of Taiwan. They're flying jets around Taiwan. China's flying jets around Taiwan. It's scary. They're saying we are going to recombine Taiwan. And then finally, Biden stood up and took a strong stance saying we will defend Taiwan if China uses military. So that's good to see. It's good to see that Taiwan is going to get support from the international community. And I think an Australian went over there and talked a lot, and that made Australia look, that Australia took some criticism from China for our ex-prime minister going over there and speaking, but it's good that people are speaking out against China taking over Taiwan. Just a footnote, it's just kind of bizarre, but if an airline is flying into mainland China, like United or Qantas, then they cannot put Taiwan as not being China. They can't say Taiwan and China. They have to, on their in-flight maps on the backs of the seats, you have to say Taiwan is part of China. Otherwise, you can't fly into China. So it's just subtle things like that. They're very determined to include Taiwan in with the government of Beijing. Banks had a great quarter, banks and brokers, except for Wells Fargo, which has residual compliance issues following their fake account scandal. And we got a couple of new people just joined us. But the brokers are just doing really well. But whereas the payment companies are not doing well. Now, MasterCard and Visa trade at something like 10 times sales, and they make obscene amounts of money. And PayPal is in a similar category. I think we've got Bitcoin now, we've got these new payment systems, we've got Square buying Afterpay in Australia, we've got these new systems that are biting at the heels a little bit, but Visa and MasterCard and Discover make way too much money, way too profitable. And so I don't object to Elizabeth Warren doing a war dance. Now that's a bit of a making fun of her a little bit because she claimed to be a Native American and Donald Trump called her Pocahontas. So it's making fun of her war dance a little bit. But Leah, she got a lot of her ideas about antitrust and anti-big tech companies from Lena Khan, who we wrote about, who's this 32-year-old who's been put in charge of the FCC, Steve?
Yeah, that's right.
Yeah, so she wrote a paper at Yale saying Amazon antitrust needs to be completely rethought, and Amazon has maybe prices down for consumers, but they have too much power. And so I am actually on the side that it's probably best to start to clip the wings of the payment systems and of some of these big tech companies. But Morgan Stanley and Goldman Sachs had a Tony the Tiger quarter. Now, if anyone remembers a Frosted Flakes commercial from what I had when I was a kid, but Tony the Tiger would say, it's great. So great results out of Goldman Sachs. Who's going to talk about that? Steve, Chris?
Yeah, I'll jump in. Had another very solid quarter. Some of the highlights were investment banking revenue, where they had the second highest revenue for that division ever. And also trading revenue was a standout. So some of their peers experienced a slight decline in trading revenue, whereas at Goldman Sachs, it was up 23%, representing a little over a third of the overall revenue at 5.6 billion. They continue to invest in their consumer or Main Street sort of divisions, which include Marcus, and that segment now represents about 15% of total sales. Overall, sales were up 26% on the same period last year, and the profit increase was much more attractive than that, and that reflects their cost containment. Compensation is always a significant expense. It was contained to a 2% increase, and overall expenses were up 6%. So they're performing very well. In other news, they continue to invest in expanding their consumer bank. They announced a relatively small acquisition of Green Sky, which is an online lending platform, typically for relatively small consumer loans to fund projects like a renovation, for example. And we've enjoyed seeing the stock price expand from a discount to the book value to a healthy premium now.
Thanks, Chris. Tyson Foods is going to report on the 15th, so we're waiting on them. Viacom CBS is going to report tomorrow, so we'll look forward to seeing that. They were down this month. Of course, they surged on the Archegos fund buying into them in a leveraged way, and then they fell when Archegos had to be liquidated on margin calls. And so the stock doubled, and then it's been fairly steady after that volatility caused by Archegos buying using leveraged contracts with the brokers. So it's just kind of going sideways. Viatris is so frustrating. They were going to report on the 8th, but for 3.5 times earnings is just stupid. And they've now initiated their dividend. They're paying 11 cents to our shareholders. And that's a 4.4% yield, which is excellent. So we're starting to get a yield out of that. Amgen reported last night. Chris, you looked at that, right?
Yeah, I think I covered Amgen this morning on our call. So they had a pretty good result. Third quarter revenue grew 4% and matched the estimate, 6.7 billion. Per share earnings, $4.76, beat a $4.28 estimate. They're getting some good early traction with their newest product, which is a lung cancer treatment, Lumacris. This was some important news around their robust pipeline of new drugs about two quarters ago. So they received FDA approval for that sooner than anticipated, and it gives them the jump on competition. The guidance for the remainder of the year, 1 quarter left, met expectations. That was revenue and per share earnings guidance. Something that has continued to weigh on the revenue is the pandemic-related delays or deferral of hospital visits, which means fewer people are starting treatments, and this represents pent-up demand, which management expect to quote gradually recover. It's a high-quality business paying an attractive dividend, and that's the right price. 15.7 times forecast earnings, 3.3% dividend. I think it's boring, but it's good boring is how I think of it.
I wouldn't call it boring. Surprise. I would call a refiner of oil making petrol boring, but I wouldn't call Amgen boring. I think they're quite an exciting company. It's very cheap, but things that get me excited don't get everyone excited. So. Moderna. Who's going to talk about Moderna? Chris, why don't you continue on that?
I think you've got last quarter's results there. They report in about a week. No, actually tomorrow night on the 4th. We'll be looking well beyond the COVID vaccine sales, but there was some good news from Pfizer last night, who reported earnings and raised their COVID-19 vaccine sales forecast for the year by about 7%. And this is incorporating the FDA's approval of their shots for younger, children, 5 to 11 years. Moderna is working towards that, but they're first waiting for the FDA to clear, as they expect they will, their shots for teenagers. But that was some positive incremental news on the COVID vaccines, and a lot of the debate among Wall Street analysts that are covering Moderna is around the robustness of the COVID vaccine and how long the tail or the continued revenue will be from that. But our investment thesis rests little on that. We're more interested in the technology platform, which has been proven, and the windfall cash flow and profit from the COVID vaccine we expect will be reinvested into developing other medicines and further improving their technology platform. So at about 12 times forecast earnings, we think it's a very attractive value stock.
Absolutely. I mean, they're talking about curing AIDS, and that's been a hard virus to kill. So having a vaccine against AIDS is pretty spectacular. It's the technology is, instead of growing antibodies and putting them into the body, this our messenger RNA technology will inject a molecule that attaches to the cell part that produces the antibody. So the cell ends up producing, your body produces the antibodies and manufactures them instead of them being manufactured externally and put into the body. Now that they've developed a technology to be able to implement those molecules into the body by surrounding them in a fat molecule that allows it to get into the cell and then start doing its job of creating the antibodies. So it's a very powerful way of putting a solution into the body. And for at the risk of offending anti-vaxxers out there, I think there was a young person in Australia who died recently from COVID, a teenager. And we don't see teenagers dying from the vaccine. So I think net, looking at the statistics, younger people should be getting vaccinated. Software, Citrix, there's something rotten in Denmark. Citrix is the back end for Microsoft Teams and for Zoom, and those stocks are doing great. Now VMware services the larger enterprises, but Citrix is going down. The CEOs blamed this transitioning from doing perpetual licenses to doing subscriptions, and then he quit suddenly after the earnings call. The company is evidently up for sale. And maybe IBM thinks they can turn it around, but that'd be rude but true. So Citrix is up for sale. I wouldn't be surprised to see IBM try to buy it and turn it around, but IBM's got its own problems. Internet bat fangs, Tesla is a standout winner, as is Kathy Wood, who runs the ARC Innovation Fund. And that has really driven the success of her fund, more so than some of her investments in, for example, Coinbase and Bitcoin related or cryptocurrency related stuff, or in the new CRISPR way of slicing and dicing genes. So she's got some very interesting things in her fund, but Tesla's the standout winner. Hertz has come out of bankruptcy, and they ordered 100,000 electronic vehicles from Tesla. So they're now more valuable than all the other auto companies combined. Spotify, a 19% increase in users to 340 million. So they're very global, but that 340 is very similar to the total population of the United States, to give you a sense, and about 12 times bigger than the population of Australia. The subscribers, not just users, because the people who use it who don't pay subscriptions get ads. So they've got a 19% increase in users, a 19% increase in subscribers, and the real revenue boost to 26% is more than 19% because their ad sales are up 75%. So great result out of Spotify. And the question is, who do you use? And I'd love to see some people just type in who they use. Do you use Apple, iTunes, or do you use Spotify? And I know everybody at Fortrend uses Spotify, not iTunes. And I'm not getting any comments there. If you're still on vinyl, which I do know people, hotels, Spotify, I'm getting a Spotify from a few people. And Tidal, who's Tidal? Does anyone know who Tidal is? Albin, that's interesting. Who is Tidal? Spotify is brilliant. Go, Julie. I like it. Okay. So if you're still using vinyl, don't worry. The drop in demand for vinyl, they're still using PVC to make sewage pipes, right? So I don't know if you know, but vinyl is made from polyvinyl chloride, and polyvinyl chloride is the biggest volume plastic, and it's also used for sewage pipes. So the drop in demand for vinyl isn't impacting PVC. Microsoft and Apple worth 12%. I got 2 percentage signs around the, I wonder if that's, there's a typo there. Plus Amazon, Alphabet, Tesla, and Meta. Now, Meta is the new name for the parent company to Facebook. So put together, these companies are 25% of the market. They're top heavy. It's an indicator that Lena Khan and Elizabeth Warren may be needed. The sub-teens, however, may outperform those in the longer terms. And my joke, or way I try to remember this, is Tesla, Amazon, Meta, Alphabet, Microsoft, Apple, and it's don't tell mama. So I hope some of you are giggling, but I thought it was a way for me to remember it. Alphabet, who's going to talk about Alphabet? Steve, Chris?
Oh, yes, I'll touch on Alphabet. Excellent earnings in the third quarter. They had revenue of $65.1 billion, which was a 42.6% growth rate year over year. Earnings per share came in at $27.99, which was 71% above third quarter last year. So significant growth, but this was really a broad-based beat. Drilling down, their cloud division had 45% revenue growth to about $5 billion for the quarter. So that takes them to the third largest cloud services provider behind Amazon and Microsoft, but they're gaining market share against Microsoft, it looks like. YouTube had 43% revenue growth on total revenue of $7.2 billion. So a very good quarter. They announced an additional $50 billion stock buyback, which we think is money well spent on the kind of growth that the company's generating. It's much better to buy back these shares, we believe, than deliver them via dividends, which is a little less efficient in the U.S. market because of the taxes. But Ruth Porat, as CFO, has done a tremendous job since 2015 with the financials and managing the treasury and the balance sheet very efficiently. And at 23 times earnings, looks like good value given the sort of growth rates we anticipate for the foreseeable future.
Now, goods are often a good indicator of future market conditions, and Marcus's twin daughters are buying records, so maybe there's a comeback coming in vinyl. Semiconductors, the world's divided in three. We've talked about this. Taiwan Semiconductors in no man's land, and that's a bit frightening. But it's become the national interest. So throughout history, countries have wanted to produce their own food or produce their own cars that could be converted into tank or the ability to move around and have their own airlines. So it's in the national interest to be able to control your source of transportation and food. And now it's in national interest to be able to control your semiconductors. Qualcomm. Who's up for Qualcomm?
They'll report tonight. We're expecting revenue of $8.9 billion and earnings per share of $2.26 per share. They, at the beginning of October, acquired an autonomous and driver-assisted technology company from Sweden called Veoneer, which they paid $4.5 billion in cash for. But this will add to their offering to autonomous vehicle companies like Google and Renault. They've partnered with both Google and Renault to provide the underlying technology and hardware and software for driverless cars.
Boeing disappointed. They missed on the top and bottom line. They've not given a date when they're going to start delivering the 737s. They had another problem with manufacturing. It's been disappointing. The stock is down, but we're sticking with this reopening trade. China has not placed any new orders for the 737, and that's going to have to change. They can't place all their orders with Airbus. So it will pop when China announces or when they start shipping. But we're very comfortable. It's a duopoly, and they will be fine. So it's a reopening trade. Western Digital.
Yeah, I'll touch on Western Digital. Similar to Apple and Amazon, they're experiencing some supply chain disruptions, which are adversely affecting near-term results. But the reason we're invested, the results really demonstrated progress towards our investment thesis. The CEO that's been David Gokler, who was installed about 18 months ago, has focused on restructuring the business sales channels towards higher margin cloud titans, they call them, and cost discipline, especially with regards to R&D. And that was demonstrated in the quarterly results. Overall revenue up 29%. The cloud division revenue rose 72% and now represents a record 44% of overall revenue. And they're also delivering on the margin improvement. So a massive 7.6 point increase in their gross margins. up to almost 34% now. And the guidance disappointed due to the semiconductor shortages, which Western Digital management and management of other companies would highlight is a very much a supply side challenge, which is a far more favourable situation than a demand side challenge. So the demand rate remains there and pent up, and Western Digital management are optimistic about working through the supply challenges and continuing to deliver on the strategy under the new CEO.
One of the lowest Ps in the S&P 500. Travel. Going on to travel. I'm going to try and wrap this up. I think we're just on time, but this is a graph of jet fuel prices over the last 12 months, and it's gone from about 140 to 240. So ours to 230, but this big increase, particularly in the last. So it's been a gradual increase for the last year with a bit of a bump in the last 2 months, but it's not as sharp an increase as you might think when you look at the price of the airline companies taking a hit. So the airlines are seeing wage pressure, they're seeing fuel pressure, and they're seeing very high cost of money pressure. But United Airlines estimates down 35%, Delta, Southwest and Delta down. Delta made a profit. Was the only company to make a profit, but the comeback of the business traveler and the international traveler is yet to recover. And so I'm surprised anybody's making any money in this industry, but Delta did make a profit. It's way too rich. We wouldn't touch an airline because of the high fixed costs and low variable costs and the cost of capital in that industry. Until about 20 years ago, the net cumulative earnings of that industry over 100 years or so was that they never made any money. So it's a tough industry to be in, and we don't want to go there. Raw materials. We made an observation about BHP 3 months ago where we said, why is the stock price going down and earnings estimates going up? And my comment was that the analysts are trying to keep up with the institutional investors, and they can't. And just a further observation on BHP is that it's the analysts in Australia, like at Macquarie and Evans and Morgan Stanley, are really trying to keep up with the global investment horizon. So the global investment community, because it's really a global investment. So the earnings estimates are now coming back off on that. So that means that the Australian dollar does have some downside exposure to China, which is in sharp contrast to the other steel companies. I'm going to skip through these steel companies because we covered those. Energy, Anadarko earnings estimates up, Occidental earnings estimates up 97% because they've got so much leverage from a like-size merger with Anadarko that they're really leveraged into this recovery. The increase in earnings estimates are not as high, but still very high for Apache and Marathon, and less of a bang for your buck with somebody like Exxon or Chevron, where earnings estimates are only up about 20% because they're just so much more diversified. But the big bang for your buck is with Occidental. And these are the sub 50s. In the top left, you can see that CF Industries, the company that makes fertilizers, is trading at under 10 with a 2% yield. If you drop down the list there, there's some European banks with high yields, but Lumen Tech, the line wire phone company, they provide copper wire. They've got a long tail of earnings that will continue, and you've got a high yield on them. Dropping down further, Altria, and then further Imperial Brands. Altria is based out of Richmond, Virginia. So you think of them as being tobacco and slavery, and Richmond was the capital for the Confederacy that tried to separate from the United States, and they're still the tobacco capital. But tobacco, as we see in Australia, it doesn't matter how much you push up the price, people are still going to buy it. So it's not a price sensitive good, let's call it. Dow Chemical, 8.9 with a 5% yield. Devon Energy, 8.5 with a 5% yield. AbbVie, the big pharmaceutical companies, 8.3 with a 4.8% yield. There's a lot of really good stocks in here. Cardinal Health, you get to the top right. There's some European banks, but General Motors has got a very high standard deviation in earnings estimates, so they're less predictable than somebody like Hewlett Packard with 7.5 times earnings. Hewlett Packard Enterprises 7.3. Rio Tinto is in there with a very large yield. And then Micron Technology, cheap at 6.4 at Lyondell. Leonardo is the defense company based out of Italy, aerospace and defense company. I think they sold their helicopter division. And then we do have some of the stocks way down in that deep value, Western Digital and Viatris. So I think it's a very interesting list. And I think the bifurcation of the market is an understatement. The don't tell mamas are expensive, and there are a lot of very cheap stocks. I look at this list here, and I think some of these companies are very good companies. McKesson, and some are traditionally just have low PEs, like the housing industry, like Fortrend and Toll Brothers traditionally just have low PEs. And then there are some cyclicals in there as well. But I think there's some very good value at this low end of these low P stocks. AbbVie is a standout. And if you don't mind tobacco is pretty good. So some of the ones that stand out to me are Imperial, Altria, Lumen, Gilead, Dow, Evan, AbbVie. AT&T is going to cut their dividend. They bought the Time Warner Entertainment business to try to vertically integrate from distribution and owning entertainment. There's a lot of change in ownership in that industry. And we'd like to see Viacom CBS change ownership, but the relative value model is unchanged with Goldman, Tyson, Viacom, Viatris, Amgen. So with big exposure to healthcare at the moment, we think that's just dirt cheap. Alphabet, and then Western Digital and Boeing. So that concludes the presentation for today. We do have a good long-term performance, and we're happy to stick around and answer questions. But before you log out, the next seminar is going to be early. We're going to finish the report 2 days before December 1st and present on December 1st. And then, anyone who's participated today gets a free ticket to our Christmas party. No, our Christmas party is back on probably on December 10th. And we're really looking forward to this opening up and having a Christmas party in the office and putting on the buffet dinner. And we're taking requests for a signature drink. Every year we have a signature cocktail, and we're taking in requests for the signature cocktail. So with that, Steve, Chris, anything to add before we finish up?
Nothing more from me.
No.
Well, make sure we get out an invitation for the Christmas party. And thank you, everybody, for coming in. And we'll publish the results. You should get the report on your email, and there'll be a summary of this broadcast available as well. Thank you very much.
Thank you.
Thank you, Joe. A replay of today's webcast will be made available shortly after the conclusion of this event. Listeners with additional questions can contact myself or the team by phone or email as per the contact information available on our website. So that does conclude today's webcast. Thank you all for joining us, and we really appreciate your time. Stay safe, everybody, and we look forward to speaking with you again. You may now disconnect. Thank you.